Good evening. Hello. Hope everyone's okay. Got some really interesting charts to show you this evening. If I start off with the Nasdaq, which correlates very well to Bitcoin. We're going to have a look at a few of the indices, the stock indices first. So we've got the Nasdaq chart here, which if this keeps going down, if this correction keeps going, we've lost the 236 here at 11,094. Currently trading at 10,995. We could go down to 10,245. This A, we've had the B, and now we've got the C. The C, in an equal measured move, it hasn't come as far as the A. So if I put my fibs on there, if I put my fibs on from here to here, sorry, it does look a bit messy when you do that. I just want to emphasize we could, well, we've come down, we've touched, it looks like we've touched. If you do it from this one here, so it looks like there, we've come down and we've touched the 618 of this equal measured move. It looks like we've got further to fall, to be quite frank, further to fall. Because this will usually go to the 382, so it's an equal measured move. So in the Nasdaq, I can see some more downward action coming in the Nasdaq, which doesn't bode well for Bitcoin. The S&P looks a little better from what I've seen. In the S&P, we've come down, we've touched the 236, and we've bounced off of that support. We lost this moving average here, the 50, and that will be, if we do bounce well here, that will be the point. Once you get above that, you'll know it's over. But this looks like a more equal measured move. A, B, the B is always smaller, and then the C, it corresponds better. So if not, we could come down and test the moving average, the 200, which is at 3107. That's a distinct possibility. But when I zoomed out of this, the wedge doesn't look good at all. The overall, if you look at the big picture in the S&P, let's get rid of this. What usually happens is this down leg up there, A, B, C, and now we've got a D, which could go to half of this, halfway of this leg here. So that would bring us down. Let's have a look to see what that brings us down to. You're looking at 2892. When you look at the bigger picture, the wedge, that these usually, when you have this A, then you have a steep B, C, the D will come down to 2892. That's rather a large correction. And with the presidential election coming up and the COVID uncertainty, I wouldn't bet against that in the S&P, 2892. Lower than that, you're looking at last year's lows, or the December 18 lows. You're looking as low as 2308. I'm not sure about that, but you could do the 2618, 2727. Right, that's the S&P 500. Can I have a look at the UK 100? Now, the UK 100 is very interesting, actually, because you've had in the correction. A, B, and the next leg is up. Okay, the next leg in the UK 500, it's been poorly performing in this wedge since 8th of June. It's been coming down in this downward direction, but the next leg should be up, and it should come soon because this is a rather long B leg. Usually the B leg will be shorter, and the next move in the FTSE 100 is up. Where could that come from? I've got the highs to the lows, the fib there. We've gone up here and we've tested the fib 50. We've gone above it and closed a day or two above it. And then we've come back down below it and we're testing this fib 50 at 6337. Then we came down lower. We even dipped below the 382. It's been a tough ride in the UK FTSE. We've come back up to the top of this falling channel, then down again below the 382, and now we come down. We go below the 382 again after resistance yesterday, after support yesterday. Now, where could this end? Let's have a look. We'll get the fib. Where could this end? From this low to this high, we're at the 382 at 5851, just below it, if that's accurate. $5,848. We're sitting on that 382 from this low to this high, and we have been down and tested it 1, 2. Now the third time we're testing it. Soon it could bounce from here. It could bounce from here, and we could do our C leg. The C leg will go up, possibly up to the 618 at 6708. That'll be a point. If we start going up, that'll be a good point to have a sell order in on the FTSE. Want to look at gold and silver? We'll look at gold first. Gold on a weekly chart. So from the August 2018 lows, we've had a big rally in gold. And we've come down. We tested the 236 first of all. We're way above the 21-week EMA. We've had a down week this week, but we're still above the 236. So as long as it's above the 236, we're sort of caught in a sideways channel now. And let's have a look at the chart. Upside down, see what we make of that. As you can see, we've bounced there. And we could come, there could be more downside action here because we've bounced up there, and we could go on and test these moving averages next. The 236 is very close to the 21-week EMA, so there could be some more downside action in gold. Silver had a big correction today. We lost the 20-day EMA. It was a big one to lose because we'd held it since the 2nd of September, which was when the crypto started to correct. So we've seen highs in crypto. We've held this 20-day EMA all the way up here, and today we lost it. And now that will slope down. The 50 will cross it in a bearish manner. We didn't get down as low as the 382. We bounced a little bit and we closed. So we went to lows today of 23.69. And then we bounced and came back up and we're at 24.71. Will there be more downside action? We could easily come down and test the 100-day. Could be one beyond the 382. We'll wait and see, but big picture silver, I'm bullish silver. I'm actually very bullish on silver in the big picture. Let's have a look at this chart upside down. It's always useful to look at a chart upside down. So the moving averages are still in the correct order, but we're going to need the macro picture at the moment with the COVID crisis is very selling. It's a very selling environment. The chart I'm interested in, the big chart that I'm interested in, is the gold-silver ratio, because silver's upside is really quite incredible. You can see here in the gold-silver ratio that we've come from 2011 lows, we've come right up here. So gold was building on silver. But I see this as there's a lot of downside action to come on this. I think we're going to retrace and go all the way back. Silver signed some big deals with some big electric car manufacturers. We've come all the way down to the 618 and tested it in the last couple of months. This is big picture. I think we're going to come down and come for a completed. Now that's telling you that silver is heading for huge upside. You're looking at 3-figure silver. We're currently, $24? If we come down to here, you're looking at a 3-figure silver. I think it's a distinct possibility. I switched this chart upside down, and it really looks like we could be in for a big bull run. We've had a big bounce, a big inverted hammer candle, and now we're on a bullish maneuver on the invert chart. And we've come up to the 618. I can see us going up and testing these highs at 32 is the next target. I honestly do believe that. And if that's the case, you need to be in silver rather than gold. This is the chart that's telling you. Let's turn it the right way up to avoid confusion. This is the chart that's telling you whether you want to be in gold or silver. And we came up in gold all the way from 2011. It was always better to be in gold all this journey. Now there's been a tipping point here, tipping point in March this year. And then silver's really taken hold now. But I don't think this is going to stop here at this 618 fib. I think there's lot more action coming down. I'm targeting a complete double bottom in the huge macro picture. So one day, gold will go back up. And when this comes down to there, you're looking at a double bottom 10 years apart. And then we could see gold go back up. There's people that actually think that silver is coming down below this 32. So silver's going to gain more on gold. It's going to come down to 10. If that's the case, you're looking at a silver price of $200, which is insane. You've got to consider also that silver's all-time high is $48 and we're only at 24. So we're only halfway to all-time highs, whereas gold has just recently been up at all-time highs over 2,000 after a 2012 high of 1,900. So you'd have to fancy silver. And looking at the chart upside down again, it's very bullish, very bullish. You've had a long bear market, a long bear market, where you came down to the 50, went back to the 61.8. You came down, you lost the 50 pretty quickly. You came to the 382, you bounced off the 382, went to the 50 again, and then you lost it completely, losing the 3. That is where gold topped out. That is gold's hype rally just there. That's a hype rally in gold where it topped out, multi-year top out. And now silver's back in the game. It's having a bad month this month because of today, really. Let's have a look at the daily chart. Today has been a poor day in silver. The fibs are on the... No, these fibs are not accurate. Let's get the fib on properly. Is this still an inverted chart? No, it isn't, is it? Yes, it is, isn't it? Well, let's have a look at it normally. So let's go from the high to the low. I don't think gold. I don't think there's upside available. I don't think that we're looking at gold going back up to this. I think we're looking at a chart where we're going down here. So let's move those fibs. Do bear with me. Let's have a look at a 3-day chart, because this one's not giving me a lot of data. Right, this massive high here. Don't forget we're on the inverted chart. Oh, that's not. Okay, so we've gone up near the 618, and then we've come back down to the 50. I think there'll be another bounce here, and silver will carry on gaining strength all the way up to this target here. On this chart, it's 30. So I would be in silver rather than gold for the foreseeable future. I wouldn't have anything in gold. I'd be all in silver.